Hello again, everyone. In this technical analysis of the stock market video, I call it No Fear Reigns because that's what's going on in the market right now. There's absolutely no fear in this market. All the major indices are sitting at all-time highs. The Dow has an all-time closing high on Friday. The S&P 500 and the Nasdaq Composite also sitting at all-time highs. So we're going to take a look at this. We're going to look at the Dow this week. We're going to drill in on the Dow Industrial. So we're going to look at the weekly, daily, the Elliott wave picture. Then I want to look at the VIX. I want to look at the SKEW index. What are these telling us right now? And then I've got another indicator that we're looking at that I think is kind of giving us a reading of the underpinnings of the market, and we'll see what it's telling us. But before we get into that, if you want to have more of this kind of information, head over to my website, joehenches.net. Check out the website, check out the membership, and become a member. All right, so let's take a look at what's going on here. As I mentioned, we're sitting at all-time highs. This market, the Dow had every chance to collapse, and we kept looking at it and really thought, okay, well here, it's getting ready to break wide open, but no, it didn't. And then as it started to come back, I had told my members, I drew this line and I said, we break above this line, and I said, the chances are we're going to keep pushing. We're going to keep moving to the upside because the strength is in the market. The momentum is to the upside, and all the other indices were already doing that. So, the Dow was up 153 points on Friday, 352 points for the week. Here's the weekly picture of it. And when we go over and take a look at the Elliott wave picture, let me drill in. Let's just look at the weekly first. Here's what I've got. The daily. Here's the daily view. I believe what we're trying to do is flesh out 5 waves in this final wave structure coming off this November low. Back here, October 31st, actually. And I believe we're getting close, but I think we've got a little more work to do. And I think this thing is going to continue pushing. It may not be straight up. It never is. We always have gyrations back and forth. But here's the whole wave count coming off the low of March 2020. And this is what I think we've got going on. People look at this and say, well, how come your first wave is so short? Well, there's no rule that says. The rule is, just so I remind everyone, because I get this all the time, the rule is of the 3 motive waves, 1, 3, and 5, 3 can never be the shortest. And many times what people overlook is taking the fact that that second wave occurs very early on. Okay, so this is the count the way I've got it laid out. We'll see how it unfolds. Right now we're into this 5th wave, and we're looking at, I think we're into the 5th of that 5th, okay, the 5th minute wave. That's where we're at. And of course, every one of these, subdivides into one cycle, one lower degree in here. So within this 5th minute wave, we're looking for 5 waves to complete. What we don't know at this time, is it going to be an impulse or is it going to be an ending diagonal type pattern? Right now it's looking and acting like maybe it wants to be impulse, but we'll see. Okay, so that's where we're at with the Dow. It looks like it wants to continue pushing the upside. Let's take a look at the VIX and see what it's telling us. I'm going to look here at the daily, and you closed at 1507. We're continuing to stay down in the basement here. Basically, what is this saying? There's no risk in the market. There's no fear. This is typically what people call the fear index, right? Well, this is implied volatility, 30-day implied volatility of at-the-money options. So short term, there's just no fear in the market right now. And this is the lowest close of 2021. And when you look at the weekly view, let's go over here and take a look at the weekly view, and I'm going to zoom out a little bit so we can see a bigger picture. This is the lowest weekly close since the week of February 9th, 2020, prior to the major collapse. So just because we're down in this neighborhood, does that mean we're about to get a collapse? No, but it does tell you that is where we are, where we were back then, right before we got a collapse. So you've got to look at a whole lot more things, and that's what we do on a regular basis. So we're looking at a lot of indicators, looking at a lot of other things. Let's look at what the SKEW index is telling us. So and I want to go to the weekly, because see how this is just closing prices kind of thing, and it just is not fun to look at. I want to look at this view, and here's what I've done. Okay, so I've got 10 years worth of data on the skew. And I really haven't done, I'll be honest, I haven't done a ton of analysis of this. But when I glanced at this, I said, okay, at what level do we seem to get very elevated readings? Well, I drew a red line at 150. And the one that jumped out at me to kind of help me do that was I looked at this cluster back over here in 2018. This was the summer of 2018, July and August. We had a few weeks that we were getting readings above 150. Well, that was the summer before the major collapse into the fall. And that huge sell-off that occurred in October and capitulation into December. Well, here we are. 5 out of the last 6 weeks have been very, very elevated, above 150. As a matter of fact, this is the highest reading that the week before last, we got the highest reading of the last 10 years worth of data. And it may be longer than that, but that's all I've got. So what this is telling us is this is implied 30-day implied volatility of out of the money S&P 500 options. Okay, so people are looking for big moves in the market potentially, okay, big collapse potentially. So it's like people are taking out insurance, there's concern, that type of thing's going on. Well, that's a little bit of a sentiment type picture. So we'll see what's happening. We've looked at the short-term picture, we looked at the the wave structure, etc. Things seem to want to continue to push at least over the near term. Let's take a look at another indicator that talks about some things that are weakening underneath the surface. The percent of stocks above their 50-day moving average in the S&P 500. Look at how it's come down and cluster of readings. These are daily readings below the 50% level. Okay, so these readings were occurring, saying that less than half of the stocks in the S&P 500 were above their 50-day moving average. When this was occurring while the S&P 500 was pushing higher. And especially back over in here, over the last couple of weeks, when we were getting new all-time highs. Okay, the S&P 500 has been up, I think it's, 9 out of the last 10 days, 2, 4, 6, 8, yeah, 9 out of the last 10 days, it's closed at a higher high. And, we've got new all-time high readings that were occurring in here while we had this kind of weakness within the S&P 500. Well, the sentiment trader tweeted about this last week, and he first noticed it. He first tweeted about it when there was, two out of 5 days and 2 days in a row, then 3 days in a row. Then all of a sudden on June 30th, we've gotten 4 days in a row. Well, all his data goes back to 1927, and it's never happened before. This is the highest concentration of clusters like this ever for. And there's been only 2 other times where there was something close, 3 out of 5 days, and they occurred May 26, 1972, a few months before the market collapsed over 50% into 73, 74. And then December 23rd, 1999, which was just a few weeks before the Dow Industrials peaked and a few months before the S&P and the Nasdaq peaked back in 2000. So pretty interesting readings, pretty interesting. I think what's the takeaway from this? The takeaway is this is a major flag waving, okay? It's telling you that there is severe weakness underneath the underpinnings of the market. And one of the things I noticed, if you go back and take a look at where we're sitting here, all-time closing highs here on the S&P on Friday, another high day, and there were only less than 100 more stocks up than down on the day. And on the Nasdaq, there were more stocks down than up on the day. So pretty severe weakness going on, even though the price action continued to push to the upside. So does this mean that we should immediately be shorting? No. You got to wait till the price action tells you that it's starting to break down. This is not breaking down just yet. But the whole point here is keep an eye on it, because we're getting some pretty big warning flags that are just waving out there, like the one I just talked about, and there's many others. All right, that's it for this video. Hope everyone's having a great 4th of July weekend here in the United States, and a great weekend for everybody else around the world. And for those celebrating here in the United States, have a lot of fun. Hopefully you're getting together with family and friends, and have a safe weekend. And if you'd like more of this kind of information on a regular basis, head over to joehenches.net. Check out the website, check out the membership. All right, everyone, we'll talk to you on the next video.